All right, beautiful. So, kudos to you on the last interview, Jamie. What I liked about it was you gave an entry at 124, and I know we were trading above it at the time, and it pulled back into your buy zone. And you had upside objectives that at that time I thought were ambitious. And so, great trade. Uh, I guess the question is, how much more and where do you stand now? Is this going to continue to blow off to the upside?
Yeah, well, all right. So let's backtrack a little bit.
Okay.
So we had that
No, it's
entry.
based on the TLT, if I'm
Yeah,
yeah.
yeah. So here is, all right, here's the daily chart of that. Okay. And this is basically the entire life of channel, uh, you know, TLT channel here. So we were looking at, remember the big thing back then was this big center line that we were talking about?
Yep.
And I think we did that interview sometime in May, and we had gone up right through it, right over here, and this was what we were looking at right here. Yeah, you're right, like 124.50 or something like that.
Yeah.
Now the target for that was basically 137 ish, 137.50, and the logic behind that was I will make this real quick so that this will be, so the pink lines here in median line analysis, you have symmetry is a concept, and you go from the line where you bottomed to the line that is equidistant from the center line, which would be this line.
Right.
Now, what happened was we gapped to that line, actually gapped over it.
Yeah.
And we haven't stopped. We haven't stopped.
Yeah. So where's that big line up on top? The big black line. We're going there.
Right. Well, at some point, I guess you have to really consider it, right?
Yeah.
So something that I noticed yesterday, I wrote yesterday's post was actually mostly about TLT and the long bond. And if you look at the last three big, or last two, this would be the third, okay, the big drops, right? The expansion, when you went to new highs, right, and we're more or less at a new high. In fact, where are we going to open up here? 140, we are 143.60 in the pre-market right here. Okay, that is a bet, basically the all-time high. All-time high is for 143.62, so we're there. But you go to the 127.2 extension, right? That is a fib, and you know the top in 2012 was close to 127.2 of the drop from 09 to 2010. The next one dropped from 2012 into 2014. You almost went to the 127.2, pulled back to the median line, went back to the 127.2, and that was the top right there, and that was the Brexit top. And then this one here, if you go 127.2, you get 152.25, which is pretty much the upper channel. So it just reinforces, I guess, the importance of that 150s area. It is pretty hard for me to believe that you don't try to pull back a little bit. And let's go to the post from yesterday, because there are a bunch of things in here on TLT. So I did see Grega talking a little bit about the 10-year, and I'm thinking the same thing here, in the sense that if you just zoom in on two structures, one from the July low, and one from that pullback low last week, right? We are making 5 waves up, right? And I know the way that you look at things, Dale, this would be kind of your third drive, if I'm right, kind of a first drive, second drive, third drive, right? So that's going on. We need to get a pullback here somewhere, though, because we're up at 43.6. We need to get a pullback to get a third drive, if you will, or a fifth wave in Elliott from here. Okay, so there's still
3 drives. I think are pretty much similar to ending diagonals in
That's
Elliott.
Right. That's right.
So the first drive would be like the first number, looks like you have 3 before the pullback in August, early August, and you had that pullback to 138, and now we're making a second drive up here, and then you get a pullback, and then the third drive would be where you have the big, the 5 up there. So basically, I learned it from J.R. Hill, but after talking to Elliott Tibbets, it's analogous to an ending diagonal.
Well, yeah, and it's analogous really to just Elliott. 'Cause I mean, if you think in Elliott, right, you have 1, 2, 3, 4, 5, but 1, 3, and 5 are the motive waves, right?
Okay.
In the direction of the trend. So that's 3. That's
Okay.
1, 3, and 5, right? 2 and
Okay.
4 just interrupt those. So it's it's the same idea.
Okay.
Now let's go back real quick to this chart on here, and if we look at, I'll go to a 4-hour chart because we can see it a little clearer with intraday. Here's the channel from last November's low, okay, which was just such a beautiful support show on that parallel. But here's the channel from that low. Now, here's another thing with channel techniques. When you trade out of the channel, as we did on the 7th, when you pull back to the top side of that channel, it tends to be support. That's exactly what happened.
Look at
Okay,
that.
you can see that right here. Now, then you have 2 targets from that. You have the half channel extension, which is here to here extended up. We're going to open up on that line, basically. I would say that to look for failure up here, like on the open. And the second one, or the full target, is the full channel extension. That is up here, and that's going to intersect that really long-term, multi-decade channel on September 5th, September 6th, okay?
It's like a runaway gap you had into that above channel there. So you had your breakaway gap lower and a runaway gap since you're into like the parabolic stage.
Right. So my, belief, just looking at this and looking at some of the momentum stuff, which is off the charts, is that you're going to fail up here relatively soon. You're going to pull back, consolidate, breathe, whatever, maybe back to 137, something of that nature, and then the final run up into the 150 area. But let's look at this. Okay, so here is, for example, okay, RSI on the TLT on the daily is above 83. Okay?
Yeah.
Right here, little pink dot.
Yeah.
Let's look at the other 2 times that's happened in history. 2009, December 2008.
Wow. Okay.
And I think it's May here of 2003. I would think that we're maybe more like this, just like get a nice pullback and then go for that 150, right? And then call it a day. Then refinance.
You know, that chart you had on there before that looks like that could be a huge 3 if you just go back one chart.
Well, it looks like it's kind of like this, the financial crisis, right?
Yeah.
Because this would be, if you would have been Elliott here, really looking at it from an Elliott perspective, you would have said this is a 4. You'd have been looking for new highs that never came.
Well, the chart you had on before, Jamie, can you just go back to it? It was
this one?
Yeah, okay. So there's 1 in the end of 14, and there's 2 in 16, and here's 3 happening now.
Yeah.
I mean, on a macro basis, it still is the third drive.
Yeah.
You see what I'm talking about?
Yeah, absolutely. So you're saying
interesting.
So you're saying this is your first drive,
right?
Second drive,
yeah.
Third drive,
right?
Yeah.
So this could complete the whole thing.
It could.
But there's still, you get run over trying to top pick it. I'm going to write down that 150 number. Jamie.
Yeah. Do we want to? I think when I did the May webinar, I think I showed you guys the mirror image thing from the bottoming of the bonds in the 70s and 80s.
Yeah.
Didn't we look at that?
I think so, Jamie.
I'm almost positive. So here's the update for that. Guess what?
Oh, okay. The analog of it.
This
Yeah.
is, it says that this is the week,
Fractal.
this could be the week of the top.
Wow. Interesting. Wow.
So,
Love your stuff, bro.
so this, you know, again, you take it weight of evidence approach and with the understanding that you're never going to get it perfect, although you can strive for it, right? But I don't know. Given the sentiment, the momentum,
It's the most crowded trade in the universe.
yeah, I do. I think that you kind of have to try to
I mean, you know,
try to go the
last
other
year,
way.
what was there? I forgot, 1.5 trillion or what, a billion out of stock funds all went into bond funds. It's
Oh
the
yeah,
most crowded trade in the world, negative yielding and instruments everywhere. Everyone
yeah,
feels so safe in bonds,
I know.
don't they?
Yeah, I mean, well, that's the thing. That's the irony of it is that we've gone so so safe in bonds, or people, you know, historically is what it's. But now bonds are so high that they are not safe.
That's right. Well, how about gold, Jamie? Because they've kind of run together.
Sure.
And, sentiment on gold is, I don't know, DSI's in the upper 90s
Yeah,
on
I think
gold.
it's.
And
Yeah, I think it is. So I had two things on this on gold. Hold on here. Dun, 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 dun.
I know you're probably getting a lot of questions on it because now everyone loves it.
Right. Okay. So gold. We can look at a couple time frames here. We've got poking up through
That median line.
through this channel. Okay.
Yeah.
And I thought we'd try to get a bigger failure up here. Let's see how we close today. Right.
Yeah.
But also this also speaks to kind of strategy and trading each market based on its based on its own chart.
Personality.
It's
Yeah.
well just its own thing, like not trying
Yeah.
to take cues from other markets. So this channel here was a beauty. Once we hit up
Yeah.
here and pulled back, this was the time we got bullish over here. Okay.
Right. Right.
Once you broke out, you take some off here. By here, I'm out. And at that point, yeah, if we go all the way up here, it's going to suck for, think you missed all this move. But at this point, you've gone into silver because we got the silver breakout, right?
Right.
So the silver breakout was over here. So, you'd be out of gold and into silver.
That ratio turned big time from 93 or so, the gold silver ratio.
That's right. So I'd rather, if there's going to be a real crazy move in the metals and, may or may not happen, whatever, I'd rather be here anyway, because this breakout in silver is just getting started, right? Where gold is not saying gold can't continue to go up, certainly can. I'm just saying that maybe it goes up at a slower rate than silver does, because this, what would you rather be in, the one that's just breaking out or the one that's has broken out a long time ago and is extended? You know what I mean?
Well, I look, you've been in the business for a while. A reversion to the mean of gold silver ratio for many years. I saw a trade between 40 and 50.
Yeah.
So, I mean, if it just came back to 70, that's a big trade.
Yeah.
Right?
Now, let's go one more look on this gold chart here. This is the full Monty chart.
Yeah.
Way back, right? 1970s, on and on and on.
I remember that.
So I
barely. If you remember it, you weren't having enough fun. Anyway,
yeah.
okay.
Yeah. There you go. I like that. Here's this gold chart, and if you really want kind of an aggressive target, for at least the way I look at things, you trade between these two levels for the most part, especially over the last couple of years. And you can see here the top in 2014. All right. Obviously support throughout.
Yeah.
Including by the way 2018, just a year ago. This is August 2018. In fact, what do we bottom? Like I think we're going on. No, I know, but I think on time, I think we're going on 1 year. So
that's right. It was August in Asia.
It was August.
That was long when they took it down $40 in Asia.
Yeah, August 2006 or August 16th, 2018. So,
isn't it funny how you always remember the markets when you were the wrong way more than when you were the right way?
Totally. Yeah. Anyway, so this level up here, 1710-ish. So if you want something nuts, that's it. I would still, you pull back, I'd say 1440 support, which is going to be middle of that congestion. And by the way, it's also the high from 2013. So also another thing that I did, I know we're probably getting a little closer.
We're okay.
Okay. Another thing that I alerted our members to the other week was, let's look at even this base back here from, I guess you could say 97 to 03.
Yeah.
A 6-year base for the most part. That's what this is. This is a 6-year base. They're kind of similar in shape. I mean,
saucer.
So yeah, well, look back then, even then, right? Even during this gigantic run that you had, right, from 2003 up into close to 2000. How many pullbacks did you have here? You had a lot.
Yeah.
Right? And even the initial one, you came back and you tested this level here. So even if we are in some, going to $5,000 or whatever, you see some of these crazy forecasts. I'm not saying that they are or are not true, but I'm saying, correct strategy, correct way to think about it. You're getting a little frothy up here, and it's not within the realm of possibilities.
See, 1380 again.
That's what I mean. It's not outside the realm of possibilities that you could pull back. And 1375, this old level here.
Yeah.
Maybe that's the new 325.
Like it.
Yeah. So that's all I'm getting at. A pullback in the larger grand scheme, big picture context of stuff. A pullback here would be totally normal. Right. And it would really reset the market for a healthier move. So
anything else on your radar? We have time for another market if you want to cover one more.
Yeah, sure. Well, why don't we kind of continue with what we were talking about last time, and it's on this, of course, and that would be dollar yen.
Okay.
There you go. Let's see.
Yeah, you were talking 92. You're still in that camp?
I don't see why not. All right, so yeah, so here it is.
Yeah. We're threatening the flash crash low right now.
That's right, and this is the big picture chart that we had back in May or whatever, and it's not going to change for a long time. But if you're looking at this for more of a, at least what I'm looking at right now, I think you always want to be prepared for, kind of, well, the opposite. Yes, you want to look and see where where you could very well be wrong, but
that's right. But
before that, even you want to know where the levels are that are important. And we are sitting. Here's a median line thing
right on it. Yeah.
Here's the symmetry, right? Where did we come from up here? That high right after that was during Asia after FOMC.
Right.
Right. It was a couple hours after it. We topped right on that, what I call the 25 line. The 75 line is here. This is actually your first level to expect a bounce. This line? It's this line right here. And if you do bounce, then you want to be trading within the same parallels. In this case, that's going to be the line off of this low, and that's going to be about 106.30. So there's two levels that you want to know for resistance, in my opinion, based on this analysis. That's 106.30 and about 107. 107 might be a little aggressive, but if you get something like the BOJ coming out and trying to support it, maybe you get a spike there. Who knows? But
what if we got over 107, Jamie? And the bonds at time-wise are near a top, because I know you say, don't put them together, but I can't help myself.
Of course.
that if the bonds are, not going, TLT's not going to 150, but your analog or fractal that you showed that we might be peaking here, isn't it possible that the yen might be bottoming here?
Sure. I guess. Yeah, sure. But
Okay.
we have to also look at the the interest rate differentials. But here, before we go on this dollar yen, so two levels for me, 106.30.
Right.
Really over that, I don't think you want to see much over that if this
Okay.
really bears. So I'd say that I wouldn't even give it 107.
Yeah, I even tried it today.
Let's go. Yeah, I mean, let's say between 106.30 and 107 is kind of like trading purgatory for the yen.
Right. Okay.
You know,
Where it
and
gets purified.
yeah, exactly. But we get well,
All
yeah,
right, bud.
103 would be a decent aggressive target on the downside. 106.30 would be kind of where you want to go to
Okay.
for that. But let's do this. So let's go to, let's see, I think it is, what is it? Japanese, what's the yield thing? 0.2? No, wait. Yield. US. Is it J? Okay, here, JP 10Y. All right, here, we're going to do this. So we're going to go. We'll go US yield minus Japanese yield. All right, so here it is, US yield minus Japanese yield, right?
Yeah.
And we'll go daily, and we will throw on we'll throw on dollar yen. All right, so right, it's really the yield spread. So I know it seems crazy, but even if bonds rally in the U.S. or reverse lower in the U.S., that's not to say that it probably would, but it's not to say that the differential will necessarily reverse, because what if Japanese bonds actually reverse harder?
Yeah.
So I
Good
mean,
point.
whatever. Just kind of opened everything, I guess.
Okay.
But yeah.
Well, Jamie, great call on that TLT, and really thank you for the update. If you want to show your website now and how people could get
Sure.
involved with you, now's the time, buddy.
Yeah, man. So this is, like I said, so SB Trade Desk is where we're at. SB tradedesk.com. This is actually the post from last night. The format's pretty simple. You've got the scans that I run, levels pay attention to, active trades, pending trades. Actually, I guess we got triggered on this, excuse me, on this last night. Bought euro at 112. Stop 111.60. And then the charts. And again, last night we looked at euro, Aussie pound, dollar yen, and then a lot of TLT and bonds. But yeah, if you want to go to that and check us out, feel free to. Love to have you. I do webinars for the members too, as does my partner,
Michael.
Mike Boutros. Yeah.
Okay.
But the webinars I do them. I was doing them during the morning, and I actually started doing them recently at night, because it's just I'm so swamped trading for doing other stuff, and I'm doing them Wednesday nights. So if you can't attend the webinars, you can always ask questions online or via Twitter or whatever too. So that's that.
Thank you so much, Jamie. It's always a pleasure talking to you and getting your views. You're one of the best. And
Thanks. I have a high amount of respect for what you do as well.
well, I appreciate that, and I want to thank you for edifying our community again, and really opening our eyes to things that I don't normally look at with your median lines, etc. So, really appreciate you being here today, my trading warrior brother.
All right, Dale. Thanks a lot, and we'll be back at some point again in the future.
Yeah, we'll talk in the fall.
Maybe we'll be talking about the great bond top at TLT top at 150. Who knows?
I think we will be.
All right.
All right, buddy. Thank you, everyone. That's Jamie Saettele, and you can follow him at Jamie Saettele or go to his website, MB Trade. That's right. It's MB Trade, right? SB. Yeah, it's right initial there. So thanks again,
All right.
Jamie, and have a great week. Have a great summer, and may pips rain down on you and Michael and all your clients.
All right. Take care.
All right. So that's a wrap for us on Turnaround Tuesday, everyone. Remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow. Adios.